Hey, good afternoon, everybody. Going to go over our trades for today, Friday, November 13th. It's been a pretty slow week overall. We did have two trades today, pulled out 6.5 pips, one full-fledged scalp, and then one scalp that we tried to piece out of. We'll go over them in a minute. First, the economic news. Retail sales came out this morning, absolutely horrible, missed in every category. So basically, headline retail sales missed. If you back out the auto industry, which is pretty volatile, that missed terribly. And if you back out food and energy, which is also very volatile, that missed horribly. We're supposed to come in with a growth of a half of a percent, came in a growth with a tenth of a percent. And then the control group, if you look at that for retail sales, even that missed by 2/10 of a percent. So absolutely horrible. And then on top of all that, the government announced PPI, which is Producer Price Index, which is sort of a gauge of inflation by production type companies. If you annualize it, not only did it miss, it was the biggest drop on record ever. And that's with gas prices increasing throughout the month of October. So here you have gas prices increasing through the month of October, which should pressure, right, products, so create inflation because you have to move the goods, right, and whatever. Annualized biggest drop ever recorded by United States government. But the Fed wants to raise rates because everything is so fine and dandy. Go figure that out. It's absolutely incredible. It says the last two times retail sales were this bad, the U.S. was in recession both times. So, not that it's a complete gauge of recession, of course, retail sales, but it's a good indication that we are headed for recession. So, I am so curious to see what the Fed does in December. I wish I could go to sleep, wake up, and it would be that day because everything is pointing not to raise rates. Everything is pointing that the global economy is grinding to a halt, in some going into deflation, and everything is pointing that we're about to enter a recession here in the States. Yet the Fed is trying to save some face. They're trying to have some semblance of credibility because they said this time last year, they said they would be raising rates in 2015. Well, 10 and a half months have gone by without a rate increase. And the next meeting is December, I think it's the 16th. So, I don't know. The only thing that is pointing to a window for them to open the rates is the unemployment number and the non-farm payroll unemployment number, and we all know that's a farce. We all know it. Even Donald Trump knows it, for goodness sakes. They all know it that we're not 5.0% unemployment rate. It's impossible to be there with the labor force participation rate being at 1977 levels, for good sakes. It's just ridiculous that they're trying to pull the wool over everybody's eyes because that's the go-to number of every month. It's the biggest number of every month, and it garners the most headlines in financial papers and regular newspapers. You know, you pick up the New York Times. If the unemployment number is great, it just might be on the front page of the New York Times. So that's the number and the gauge the government is really trying to jam down everyone's throat. Everything else, from housing to retail sales to PPI to inflation to this, that, and the other thing, horrible. Somehow they're saying, well, everyone's working, so many people are working in this country, and everything's all rosy. Well, they could take that, and you know what? Anyway, let's get to the two trades. Like I said, 6.5 pips on a size adjusted basis, one full scalp and one 20% size. The first one you're looking at here is a trade in Aussie dollar, which is 20% of normal size. We were long this last night, 0.71351. We were looking for it to run up higher than this. It didn't happen until around 4 or 5 in the morning. Obviously, we were not in the office. Usually with these type of trades, we like to piece out, as you know. So, we would have been looking to piece out, somewhere around 43.45, 71.43.45, then maybe up by 50, and then maybe put the rest at break even, and hopefully it runs higher. Unfortunately, it just wasn't. You can see here, it wasn't happening when we shut the computers down for the evening. So with that said, we adjusted our stop. Our stop was down in this area. We actually adjusted our stop to the low here to risk less, since we're not going to be in front of the computer. And then we also lowered our profit target, which, like I said, we wanted to piece out and hopefully ride it all the way up. So we just throw it all out there, right around the half figure, even though it was only good for, call it 15 pips. The half figure is a big psychological level. So we put it in there. We got hit. It jumped over that half level by 1 or 2 pips here on the upside, a couple of times here and here. And then again this morning when retail sales came out, there was an initial pop higher. So, but we got all out around, I guess that was around 5:30, 6 o'clock in the morning. We come in the office around 7. So, but in the end, 14.9 pips, size equivalent 2.9. So we'll take that. And then this was a full-fledged scalp that we traded during the retail sales. Obviously, we weren't in it prior to the announcement, but as soon as the announcement came out and it was jumping, we just grabbed it real quick, 1.52469, just blasted it right out, picked up a quick 3.6 pips, 1.52505. You know, a full scalp like this, you're not going to risk. You're going to risk 15, 20 pips, no more than 30 pips. So your risk element is the same as a trade like this, Aussie dollar. It's just you take a bigger size and you risk a smaller amount of pips. Where the Aussie dollar, you're going to trade smaller size and risk much more pips. So initially we were risking down to here, which is close to 100 pips. Okay, so you therefore take much smaller size. So it may look risky, but it's not. Anyway, so we had the pop. Unfortunately, the thing that, well, not that we would have been holding it, but, you know, unfortunately the pop wasn't stronger. Sometimes on big numbers like this, you know, we get more of a move. See like this is much more of a move. You get a pop here, another pop. This was a big move here, pop, and then the second candle even popped up higher. Trying to see, those were the two bigger points over the last few days of data here. And here. So unfortunately it didn't do that. You know, if it would have, you know, this initial pop would have been stronger. So maybe we would pick it up, instead of picking up 3.6, might have been able to pick up, you know, 5 to 7 pips on a quick trade like that, which would have been really sweet. Unfortunately it didn't do it. So, but we'll take it and we'll move on. So that's it. Like I said, on a size adjusted basis, 6.5 pips. So that's it for the week. Pretty much a grind of a week. So pretty frustrating, if you ask me. If you're still looking for signals, if you're still trading, good luck. If you're still looking for signals, if any come out, they'll be coming your way. I doubt there will be. It's already almost 1 p.m. on Friday. Market's going to close in a few hours. Have a great weekend, and we'll be back Monday, assuming we get some action Sunday night and Monday morning. Have a great weekend.